Let's connect then with Sanjiv Bhasin, who's joining in and find out his views on individual stocks. Sanjiv, hi there. Good to have you on board as always. Let's begin by talking about the outlook on Reliance Industries, given that last week it shaved off about 4% or so. You've got Morgan Stanley, who believes that the chemical margins are now showing signs of improvement, and they've got an overweight rating here.
Yeah, good morning. Avan, I couldn't get the name of the stock. You said something
RIL.
on special.
RIL.
No, it's
Reliance
not.
Industries.
I couldn't get the name.
Reliance Industries, Sanjiv.
Sorry, but the voice is cracking. I cannot get the name. Maybe
Okay.
better.
Maybe we'll come right back to you. In the meantime, why don't I get a chart check, Naresh, from you on Reliance Industries? What is the chart indicating?
So technically, the stock has been trending up. The last time we came closer to 3,000, it tried to make an attempt but could not break out. The previous breakout move started from 2,800 odd level, so that should act as a support now. Till the time it holds about 2,800, it becomes a buy. So at closer to 2,800 now, a stop loss is at 2,750 and should be a recovery back to 3,000 rupees ideally. And the last breakout was with good volumes when it happened and a big uptick, which happened in the month of Jan. We saw a single day 3-5% uptick. So out here, the drift has been slow and steady from 3,000, 3,030 levels. So today on dips, it should be a buy with a stop loss below 2,750.
Okay, that's the take coming in on Reliance on the charts, but I think Sanjiv is back with us. Sanjiv, we were trying to get your opinion on Reliance Industries, whether this is going to be the one which is going to resurrect the market from that 2% fall that the Nifty alone has had last week.
Yeah, good morning, Aisha, to you and Avan. Sorry, it was not clear. And how could I miss the biggest market cap stock? But this windfall tax may put a little bit of pressure. On the other hand, their chemical business is doing very well. And that I think is globally there because China's back. And if you see, along with copper, there is again demand in specialty chemicals on the side of which Reliance does as far as most of their products. So I think they're aside from now the retail and the geo, the actual money may be coming from the oil to chemical business also. And that should be a positive for Reliance because that is where they've invested in the last 10 years and now return on capital will come there. So I think, yes, Aisha, I think Reliance and HDFC will hold the Nifty while the mid caps will see some more maybe consolidation, profit booking because of their sharp run up and because of some of the equalizing because of the SEBI diktat, the mutual funds and the small and mid cap holdings. But I still think it's a broader market opportunity to buy. Nifty, according to me, is going to rescale new highs by the first week of April. So this consolidation may last another week. Wednesday is the Fed policy. I think a large part of that is already priced in. So we think that the end of February, end of March, first week of February, again, we should retest those 22,500 levels on the way up on the index.
Okay, fair enough. Meantime, let's also get in a take then from you as to, Sanjiv, what the outlook is when it comes to the entire consumer sector. Given the fact that we are looking at lots of brokerage notes that are talking about premiumization being the next big thing, rural consumption as well picking up, what's the outlook on the likes of even a Tata Consumer, Varun Beverages, Devyani, Sapphire, etc.?
Yes, Avan, I think that's a very sweet spot. And as you can see, the demographic premium, the aspirations is now seeing ambition to climb higher. So, it's the rural income which have started to consume much more of the branded and premium stocks, products, which has seen, Starbucks and the coffee chain do extremely well for Tata Consumer. We think Costa Coffee is biting into market share over there. So Devyani on the back of Pizza Hut and their other products is doing very well. Same is the case with Varun Beverages. We also like Bata. Your shoes and your chappals have to change. And in that, you're also seeing the move from campus to Bata. We like Patanjali over there. So mixed bag. I think the worst of those numbers are already priced in. And if any, you could start to see volumes and margins both expand on the upside. On the On the large caps or the big stocks, I still like Nestle and Godrej Consumer, but Bata Patanjali are two stocks along with Devyani, which I can bet my money on.
Sanjeev, the election dates finally are out. Just wanted to understand whether there is tactically any way that you would recommend one plays the PSU pack. Morgan Stanley, for instance, has come out with a tactical note on defense PSUs. What about the rest?
Well, you will have to see that, Aisha, they've had the best run in the last 2 years. And any little bit of flip-flop can see large amount of volatility in the stocks on the election outcome. I don't rule out more volatility because the run-up has been sharp, but I still prefer the power lenders like REC, PFC. I like Nalco and SAIL in the metal space, and I think ONGC can be my star over there. On defense, I think the order books are strong, but the execution may take another 2-3 years as what the valuation you're giving. You're giving something like FY27 valuation, and that justification becomes little difficult. But we still think this basket of stocks would be some of the positives play out. The two other places which are very positive is construction, and hence NBCC and Hudco would be very, very key beneficiaries going ahead if the same incumbent government comes back.
Okay, another stock that we'll also be watching out for is Coforge. They're set to raise up to 3,200 crores via the QIP route, and that's about 8.5% of the current market cap. A word, Sanjeev, on Coforge's fundraising plans in Midcap IT?
Well, Avan, if you recall, Coforge and Persistent have been two of my, outperforming mid-cap picks all the way from 52, 53. When we said that the private equity has totally exited, there is nobody who owns more than 2% stake in Coforge, and it becomes a very, very lucrative target for someone to acquire or take a stake, and that is what we've seen this run up. Plus, I think Midcap IT has done very, very stellar in the last 6 months. We prefer now LTTS and LTIM. Given the traction on order book, on defense, on digitalization, both those companies stand to gain. But our top picks remained HCL Tech and Wipro in the large cap. And now we've turned our preference. Coforge was a very good buy around that 5,200. We think LTTS and LTIM are two stocks which you should add now and a little bit on decline.
We discussed a few stocks, Bhasin Saab on Friday. And I'm just looking at the list. There you go. India Bulls real estate was there. We discussed Federal Bank and we discussed Hindustan Copper. Let's take them forward. In the India Bull real estate up 10%, Hindustan Copper up 4%, and Federal Bank up 3% on Friday.
Yes, Nikunj, good morning. So, like I said, Federal Bank was unnecessarily the target of that, little bit of caveat by the Reserve Bank on co-branding. They've just started the credit card business, and it's not even 1.5% of their business. The stock came out with very good numbers. The NIMs are doing extremely well. In gold loan, they are getting more traction. So I think Federal Bank for me is an outperformer on the mid-cap banks. On Hindustan Copper, if you just see yesterday also, copper has hit almost a 3-year high, which is telling me that China's cut in output will see the copper cathode or the underlying asset do extremely well. Hindustan Copper becomes a proxy for that, along with the Vedanta and Hindalco. Vedanta has copper as a reserve, but Hindalco does TCRC. India Bull Real Estate for me is the best stock of 2024, given that we think the merger date is now 22nd or 24th, which from the NCLT, once that gathers steam, Embassy coming on board, 12% by Blackstone, all that will add up to this being re-rated. You cannot have market cap of 5,500, 6,000 on a company which has a huge land bank both in Maharashtra and in NCR. And the third one was, all these three, India Bull Real Estate, Hind Copper and the Federal Bank. As a disclosure, these three are in our portfolio and we would use any decline to add on to these.
Fair point. Okay. I want to be specific here with India Bull Real Estate. It's like one of those high beta stocks, Kunal. The problem is that it is so volatile. By the time you make up mind, the trend changes.
Yeah, it's volatile, but Nikunj, the good part is that the stock is still confined into a trading range. Yes, it's been a huge underperformer when you look at this with respect to the other real estate peers. whether it's the formidable ones like DLF, Godrej Properties, etc., or even the mid-cap ones like Anantraj and many of the other peers in that basket. So yes, the stock has been an underperformer, but the good part so far is that the stock is still trading into this 20-25 point range. So I think closer to 100, 104, you see a lot of support for the stock, and just around that 120, 125 is that the stock suddenly takes a lot of resistance. There's been good selling which happens at those higher levels. So it's a matter of time, and as well as a breakout which potentially could lead to the stock into trading into a higher range. So I think 120, 125 range, that's a very critical range to watch out for. And I would sense that the more number of attempts the stock eventually makes towards breaking or testing a resistance, eventually the break happens. So I think I would probably want to watch out for that 120, 125 levels, and above that, I would believe that the stock should be good enough for even 150 plus.
Just checking in on some of the big losers within the broader universe. Do remember we did see that underperformance take place of the broader markets versus the frontliners, and some of the stocks that had it rough within the mid-cap space, pull up the 1 week chart, were an NMDC which declined nearly 17%. You also had BHEL which knocked off close to 15% in the week gone by. Macrotech developers, something like a Tata Chemicals, down nearly 14%, so double-digit cut, and SAIL was the other one that came under pressure. Curious, Naresh, to get in your takes, is there more downside in store for some of these names?
So the one which I track closely is SAIL. That's interestingly placed because the stock keeps going into derivative band, and that's where the correction keeps, the volatility keeps getting higher for the stock. Now, if you look at SAIL, what is interesting is the fact that the stock had made a top around 145, 150 back in 2021. And that's the time where it started moving from 30 to 60 bucks all the way to 145, 150. Now, if you look at the last 2 months, the two tops are around 145 to 150. There is a strong base around 110 to 115 levels. So at 120, the risk reward is in favor. I would expect eventually the stock to eventually break 150 levels also. So at current levels, it's a preemptive buy with a 6 to 12 month view or even a 3 to 6 month view. So looks promising in terms of risk reward at current levels.
All right, and Sanjiv, before we let you go, then take us through some interesting recommendations that you're spotting within the entire metal space, given that we spoke about SAIL declining for the week gone by.
Yeah, so Aman, I think Hindalco, Hind Copper, Vedanta, Hindalco. Hindalco would be the bottom of the order given that their capex on Novelis will see return on capital decline. But I would say Hind Copper, Vedanta, SAIL, and Nalco. You make these four as a SIP, and you should be doing extremely well. Also, I have a confident feeling that the dollar is going to weaken further. China demand comes back, and their cut in production could see, particularly the non-ferrous ones come back very, very strongly. And in that basket, I think copper aluminium should do very well. SAIL as a byproduct that iron ore has fallen is beneficial both for input costs because it has captive iron, and same for the case of Tata Steel. But these 4 or 5 stocks should do extremely well in the next 3 to 5 months.
Okay.